Hello there. Welcome back to the Trading Week. Welcome to Midweek. We're going to welcome our Wednesday guest, Peter Tuchman of QMS. We love him here. Peter, thank you so much for joining me.
Thank you for having me.
Well, we were greeted back from the holiday only to find out that North Korea continues to test ballistic missiles. Right now, trading seems a little muted. Would you say that tension is circulating around the marketplace?
I absolutely disagree with you 100%. I don't think the market cares about what's going on in North Korea. It's proven to us lately that a lot of this geopolitical stuff, a lot of administration-based headlines are not affecting the market at all. As I just said to you before, so we opened sort of flat, slightly up. Market sold off because oil broke down severely. Oil's been on a rebound lately from the 42.5 level, right? And that's for a lot of different reasons. But it bounced back up to the 46, and that's some days the market's been engaging that trade, some days it hasn't. Today it engaged it on the downside, but the market's once again rallying back. So my take on all this is, I don't think this is really holiday related. We saw a couple of big trades over the last couple of days, the last Friday and Monday before the holiday week, for the holiday itself, that the market had these huge moves right on the close, big sell-offs. I don't really know what they were about. Maybe someone's making a big bet on the short because we're at all-time highs, or they were just profit-taking coming into the end of the quarter. But right now, today's market, it's rebounding without oil rebounding. And my gut is that economic data must be better than we think. That I think, I just saw a blurb that said mortgage defaults are the lowest historically ever. So that means that there are more people back to work. We saw manufacturing numbers come out on Monday that were way better than expected. So net, at the end of the day, maybe, the market is at all-time highs. Maybe the economy is, in fact, doing better. And the market doesn't need to respond to what's going on in North Korea. Net, at the end of the day, that has no effect on the market.
Well, perhaps we'll hear the Fed comment on the economic landscape in their minutes this afternoon. What would you be listening out for in terms of what they'll do for the rest of their monetary policy, for the rest of the year, I mean?
You know what, I think it's my interpretation of them lately is a little bit odd. They're making judgments off of changing daily trading. We're seeing a market that last week was up 200, down 200, up 200, one day after the other, right? 300 point moves, okay, up and down over a 3-day period. If they're responding to that kind of thing to make their judgment about interest rate raises, then I think we're in a little bit of trouble. I think they really need to broaden their outlook, stay on course to what they're going to do. How many? A couple this year, right? A couple already this year, maybe one more. Okay. I think it's important that they raise rates into strength of the market. That's shown that it works so far this year, right? We've seen our market rally huge since the election. We are at all-time highs. We've seen a couple interest rate raises into that strength. It has not put any sell pressure on this market as normal interest rate raises do. So I think if they continue that posture and the manufacturing's better, the employment rates are better, and more people are back to work, people spending money, people aren't defaulting on mortgages, I think it's not a perfect start. It's a perfect sunny day.
Well, I like how you say it, and it is summer, so we will leave it at that. Thank you so much, Peter, for joining me midweek.
Thank you. It's great.
This is the Vaz on location reporting from the New York Stock Exchange.